Good evening, everyone. This is Abhish Jain, and today I'll be taking a session. And happy Mahashivratri to everyone. Before we begin, please go through the disclaimer once. Hope all of you are able to hear my voice and see the screen. Friends, can I get quick replies from everyone, please? All right. So let's get started. Today we have a topic of advanced candlestick patterns. Now, how many of you have heard about the advanced candlestick patterns or are practicing it on a regular basis? Okay, so Praveen has heard about it. So Praveen, are you practicing it on a regular basis? And if yes, then how you're taking help of that? You are entering into the trades. You're not using it? Okay, all right. So today's session is an extended version of the candlestick basic session that we had in the beginning of this program. But here, since we have covered some key levels like engulf, MIP, swaps, like that, and even BBFL for that matter, we have more clarity as to how to approach our charts with the buyers to take a trade. All right. So generally, these are conventional candlestick patterns which people use, and they don't relate the price action with it. Okay, they don't relate the price action with it. And today I'm going to give you that understanding as to what all patterns are there as such. And then I'm going to take you through the application of it, which is more important. And for that, you need to have clear understanding of the engulf. So can I get confirmation from everyone if you are very much clear with the engulf part? Are you all clear with the engulf? How to take a trade on source of engulf or origin of the engulf? What should be the target of the engulf? Are you all clear with that? All right. So there are like 50 to 60 candlestick patterns available. If you read any candlestick pattern book, then there will be probably 50 to 60 candlestick patterns. But today I'm just going to discuss 13 of them which are widely used and which are more important. And they are more than enough for enhanced trading experience, friends. Basically, the higher time frame candlestick patterns are more relevant. So I'll not advise you to look for these patterns below 60-minute chart. The accuracy will increase as you go on to the higher time frame, right? So don't observe these patterns below 60-minute, preferably if your trading bias is, let's say, for positional, okay? You don't go looking for these patterns below daily. Am I clear in that? All right. So a quick recap of the candlestick basics before we begin. So in candlestick basics, we studied about the upper shadow, real body, and the lower shadow. And we have high, low, open, and close, wherein if the close is above the open, it is a bullish green candle or white candle for that matter. And if we have the close below the open, then we have a bearish red candle or black candle for that matter. All right, just simple basic thing, just recap of that. Then there are few properties of candlesticks which we should be aware of. They are, first is the color. So color can be, the color is generally displayed as green or red in colored charts, or white and black in black and white charts. So black is for red, white is for green. So green candles are considered to be bullish as the closing is higher than the open, and red candles are bearish as the closing is lower than the open. All right, everyone clear with this? Then comes the body size. We also studied about the body, expanded range and narrow range. So the body size represents the degree to which the bulls overcome the bears in case of a green candle, or bears overcome the bulls in case of red candle. So a large body shows increased commitment, okay, increased commitment, and a small body shows reduced commitment, basically reduced volume or increase in volume. If the candlestick is an expanded range candle, very wide candle, then the volume will be comparatively higher than that of the narrow range candle, or the bias, market participants bias will be strongly on one side. All right, volume may not necessarily be increased in expanded range candle, but there will be strong trend, underlying trend in case of an expanded range candle with the large real body. All right. Then comes the range, wide range and narrow range, that is the high minus low. So the range of candle is the distance between the high to the low. A wide range candle shows increased volatility, while a narrow range candle shows a reduced volatility. All right. And then comes the shadow location. So we have upper shadow depicting the selling pressure, because it is the difference between the upper body and the high, and then the lower shadow, it represents the buying pressure, that when the price went down, there was some rejection there and buying emerged, and price managed to close above the low. Everyone clear with all these things? Can I get replies from everyone, please? Let's be attentive and more interactive. And basically, friends, there are majorly two types of uses of candlestick patterns. First one is where you look for confirmation. We can use candlestick formations to take entries near or inside higher time frame zones. It can be in intermediate or zoning time frames. The candlestick patterns can appear on intermediate or zoning time frames, totally up to us, right? And second is the scanning, which majorly I use for my trading. Candlestick formations can be utilized for stock selection for trades, mostly intraday, and when the trade to be taken on lower time frame. All right. So when I'm having a bias to hold the trade for not more than 5 trading sessions or a week as such, then I use this kind of a pattern. And if you are observing these patterns on higher time frame, let's say above monthly, then the holding period or the validity of that pattern is longer than when you're looking at it on lower time frames, let's say daily or weekly for that matter. So majorly I use it for scanning, and today I'm going to discuss only that portion of the candlestick patterns. All right. So let's get started with the patterns. Now, many of you must have heard about this basic pattern, that is the doji. Friends, how many of you have heard about it? Doji. All right. So it looks somewhat like this. It can be Now, all these patterns that we are going to study today, friends, they are going to be either bullish reversal or bearish reversal patterns. They are going to be simply reversal patterns as such. All right. So it can be a bullish or a bearish single candle reversal pattern. As you can see in this picture, it appears like this. The open is almost equal to the close in such candlestick pattern, resulting in no or very small real body, very tiny one. It indicates indecision in the market, and it shows that neither the bulls and nor the bears are in control. Neither party is in control there. The doji can be found at the top or at the bottom, and the gravestone doji, which is the middle doji here, is usually found at the top reversal because the significant upper shadow indicates strong selling pressure. And while the dragonfly doji, this doji found at the bottom indicates strong rejection at the lower levels and indicates buying pressure because of this lower shadow. So everyone clear with this, how the pattern appears? Just memorize this picture, friends. For each and every pattern, just memorize this and understand that if it is a bullish reversal, then it should be happening after a substantial drop in price. If it is a bearish reversal, it should be happening after a substantial rally in price. Very simple, Panda. Okay? And especially it should, when it is coming down and you are looking for a bullish reversal candle, then or candlestick pattern as such, then you should be near an accumulation area or near a conventional support. Just opposite of that is when the substantial rally has happened, we are looking for bearish reversal candlestick patterns. It should be happening near a resistance area or a distribution level. This case will be applicable for all the candlestick patterns that we are going to be discussing today. All right, because we are looking for big reversals and we want complete trend change, and therefore we are going to look for reversal patterns only at the extreme levels, top and bottom. All right. And anywhere in the middle, the probability of working up that candlestick pattern is almost close to 30 to 40% as compared to when it is forming after a prevailing trend. Like bullish reversal coming after a substantial fall in price is more strong than when it is coming in after a rally in price. Okay, or in between the downtrend. Am I clear in that? All right. So for doji, we need for every candlestick pattern, basically we need a trending market. Here we need an uptrend for a bearish reversal or a downtrend for a bullish reversal, as I just mentioned. Now here with very small real body, we can call this candlestick pattern as a doji. Now generally today I'm going to be discussing the ideal cases, but you can take some leeway, and if in this candle, like there is some body there, almost open is equal to close, but there is still some tiny body there. So we can still call this as our doji. You'll not get the ideal cases everywhere on the price chart. It will be very difficult for you to find that. But tell me, like this is the doji, this is also a doji, right? So which has the highest probability for a reversal? This one, point number 1, or point number 2? Why? After big rally, point number 2. Exactly. See, look at the prevailing move. Right? So this market was trending here. This market was sideways here. Right? So we need We need a trending market for a reversal, especially a vertical shape, a very steep trend should be there, close to 90 degree. All right. Now with every pattern, I'm going to be discussing about the confirmation. Okay. So the confirmation comes when the price trades above the doji at the market bottom. Above the doji, I mean to say the real body of the doji, or below the doji at the market top. By that, I mean the real body of it. In this case, the doji is green, right? So as soon as market starts trading below the open of this candle, I have confirmed reversal in place. Will I be jumping onto the trade there? Will I be jumping onto the trade as soon as I see this pattern? If it is forming near a distribution area after a rally in price? No, right? We are retest traders. We are retest traders. We are not going to jump onto any level without a proper zone or without the price action supporting that. Right? So let's take an example here. This is the Sensex chart. Now the prevailing trend at the time, like already there was substantial rally in price. Okay, substantial rally in price. After that we had this doji here. Now as soon as market started trading below the open, this is a green candle, so it should start trading below the open of this green candle. We have a confirmation that a short-term top is in place because the prevailing trend was strongly up. All right. Now with each and every pattern, I'm going to open the chart and going to discuss about the application part of it. How to plan a trade there. So basically in this case, can you see that this is a zone here for us? Basically this is a zone after this candle confirms it. And at the same time, we have this engulf also. So when price revisits this area, we can plan a short trade. We need to patiently wait for that. Now patterns, they emerge because of institutional selling or institutional buying. And there may be still some pending orders left there in this area. So that is one part of the trading. Now we want to be in the trade as soon as the pattern emerges, right? The very next day we should be in the trade if the pattern is confirmed. So how to go about that? How should we be doing that? I'll open the chart now for you. Friends, are you able to see my chart? Please confirm. So I'll open GHCL Limited. Now can you see this, friends, that after a substantial rally in price, look at this, what kind of rally was there? A substantial up move, right? Substantial up move was there, and then towards the end of that I have this doji. Can you see this area? Isn't it a doji? Right? So when will this pattern be confirmed, confirming the market top there, short-term market top? Once price starts trading below that. Haven't we got that? We got it, right? We got it. Now we want to be in this trade as soon as possible. Now in the process of doing that, see, I'm going to use a lot of engulf today. So in the process of doing that, price also engulf this zone, right? This is a demand zone, basically a bullish flag limit. Price engulfs that. So at least price is going to crack till this demand zone. All right. It is going to crack till this demand zone, that is the opposite source of engulf. So how do we take a trade there? This pattern emerged on daily chart, right? So we can go on to the low time frame. First time frame that we'll be looking at is 60 minute. So 60 minute, like the candlestick pattern was confirmed on this day, 21st of October 2016. So the very next day we want to be in the trade. because the underlying momentum immediately after the trend, after the engulf is going to be down. So we want to be in that trade as soon as possible. So basically I look at the doji, I looked at the close of the next day, which happened below that, and that gave me the confirmation that the engulf is there, the market top is there, I should be looking to take short trades there. So therefore I'm going on to the lower time frame, 60 minutes in this case. And here also what I'll do is, I'm not getting data here. So here basically there was a zone on the left. Actually I opened that on my laptop. So understand that there was a zone on the left which was engulfed by this down move. Okay, which was engulfed by this down move. Now this happened on 21st of October. So immediately the very next day, I want to be in that short trade. I have this zone with me here. Okay, this is a drop-based drop. Everyone agrees to this? Now there was a zone which also got engulfed on the 60-minute chart. Okay, so as soon as price arrives in my zone, now I looked at the pattern on the daily chart. So it is going to hold for at least 1 week. A daily candle pattern is going to hold for at least 1 week. That is one time frame above that. A weekly candle pattern is going to hold for at least 1 month, and similarly like that. One time frame higher is its validity. So I can continue holding on to this trade. I can plan my entry here. I can plan my stop loss here and target the opposite source of engulf. Should we take trade if only the pattern is there and not the engulf? No. See, with every pattern, each and every reversal pattern, definitely there will be an engulf on the lower time frame. And additionally, if the retracement to your source of engulf is not happening immediately, if it is not happening immediately, then we are going to look for price action entry, that is engulf on arrival again. Therefore, we'll be increasing our RR. We may fine tune this zone further onto the lower time frame if required, because you may not want to hold on to this trade just like that. Okay, so first it was confirmed drop-based drop here. So you look for engulf on arrival. So engulf on arrival happened here, right? This demand zone got engulfed here. So just near the top of that is my origin of the engulf, but my higher time frame is very close to that. So instead of taking an entry at 277, I may plan to take an entry at 280.80 and keep my stop loss above that, the parent zone, and take a short trade. Therefore, my stop loss is reduced by almost 3 rupees. So I'm looking at the engulf on arrival again. Look at this. This was the demand zone. Basically, drop-based rally got engulfed. This is the origin of that engulf. This down move caused that engulf. Now, as such, the source of engulf is this zone. But I want to be in this trade for big targets. So I want to provide my trade some breathing room by keeping the stop loss above the higher time frame zone, and target will be the opposite source of engulf on the higher time frame, which I just mentioned. The opposite zone will be based on the daily chart that I had marked, the rally-based rally. This one here, 260. 260 will be my opposite zone. All right. So 260 will be my target. Now, if I keep my target based on the higher time frame, look at the RR that I stand to make. Look at this, almost 4.6:1. And isn't the price taking some pause there? So my target is not that bad. And in between, just look at this, we got one expanded range or momentum green candle here and one comparatively smaller green candle here. Rest all the candles from that level were all bearish majorly, or narrow range candles if they are green. So I am in the impulsive down move. My trade is supported by the impulsive trend there. So at all times I'm going to look for engulf. Now various combinations of engulf I'm going to be discussing today, but you understand at least how I'm approaching my trades, how I am planning my trades. And I'll be using the candlestick patterns only for scanning today, not for confirmation. Because before the confirmation is there, you have an engulf on the lower time frame. Engulf is the most leading price action indicator we have with us. Now you must have seen many charts, like the recent most example is the Reliance trade, where we planned 1,025 long entry with a stop loss of just 10 to 12 rupees, and it shot up from that by giving us almost 200 points. So if you had taken that trade based on the lower time frame engulf, it was a 100:1 trade, friends. 100:1. And very short, like it was, the target was achieved in just 10 days, close to 10 days, 10 trading sessions. So engulf is most leading indicator. I'm going to be using the candlestick patterns for my scanning purpose, and my target will also be based on the engulf, that is the opposite source of engulf. Isn't that what we studied in the engulf session? Friends, I'm not getting any replies. Can you please reply? हेमंत जी, आप लॉग आउट करके लॉग इन कीजिए. आई थिंक बाकी सभी को तो आवाज आ रही है. प्रदीप जी, यू हैव अ क्वेश्चन? यस, प्लीज टाइप इन. आई थिंक यू नीड टू रीस्टार्ट योर मॉडेम. हेमंत जी, आप आपका मॉडेम, इंटरनेट का मॉडेम रीस्टार्ट करके देखिए एक बार. प्रोबेबली कनेक्टिविटी इशू है. ओके. As such, I did not ask any question. My statement was that I am only going to be focusing on the candlestick patterns for scanning purpose, and I'm not going to enter into the trade based on conventional method. I'm going to look for engulfs only. Engulf is the most leading indicator, price action leading indicator that we have with us, and based on that, I'm going to plan my trade. So today, all my trades will be based on the engulf, and the target will be based on the higher time frame opposite source of engulf. So everyone clear with that? Are you having the clarity with the engulf? Do you have the confidence on engulf? Are you able to spot engulfs very easily? There are two elements of the engulf, basically, source of engulf and the origin of the engulf. So which one to rely on? That is decided based on how long I want to hold on to the trade. If I want to be in that trade very quickly, I'll be taking my trade in the source of engulf if the source of engulf and origin of the engulf are not the same. Like in this case, see, even the source of engulf was this one, the above one. This was the source of engulf, and this was the origin of the engulf. So if they are not the same, then and at the same time, if I want to be in the trade very quickly, I may take an entry in the source of engulf, but my target will be reasonable, 2:1 or 3:1. I'm looking for big targets, right? So therefore, I'll have to rely on the origin of the engulf, and based on higher time frame, if the origin of the engulf is very close to the distal line of the higher time frame, I'll put my stop loss above that, because I want to be in this trade for a longer period. It should not happen that after giving me some move in my favor, it stops me out. In this case, it is supported by higher time frame, source of engulf, and also taking entry by price action. Exactly, Hemanji. Therefore, my working probability of the zone increases dramatically. Origin of the engulf is not as risky as the source of engulf, Pradeepji. Source of engulf is riskier because it is below the origin of the engulf. Origin of the engulf is the best place to take the trade, and especially if they are overlapping with each other, then no trade like that. That's the best trade. So everyone clear with this example? I have found many examples associated with each and every candlestick pattern. So 13 examples in total I'll be discussing in detail today. So if the session extends, then also pardon me for that, but I want to deliver the best thing today. I want to give you that understanding as to how to go about trading using these patterns. So please be quick in your replies so that the pace of the session can be managed. And at any point, if you feel that you're not very much clear, just stop me there. That clarity you need to have. So if there is source of engulf, then we should take entry by price action as conservative trader. Price action you're already following, right? This is the demand that got engulfed in this candle, and this is the source of engulf, and after this engulf only this was decided that this is the origin of the engulf. So price action confirmation you're already taking there. तो हमेशा कंजर्वेटिव ट्रेडर को एनगल्फ तो देखना ही चाहिए, एनगल्फ तो देखना ही चाहिए, बिकॉज इन दिस केस देयर इज अ लेवल ओवर लेवल. यस, सो लेवल ओवर लेवल है, बहुत क्लोज है दोनों, और हायर टाइम फ्रेम का डिजिटल लाइन भी यहाँ है, तो बेस्ट यही रहेगा कि मैं एंट्री लूज ओरिजिन ऑफ द एनगल्फ में और मेरा स्टॉप लॉस रखूँ हायर टाइम फ्रेम के डिजिटल लाइन के ऊपर. इट इज बेस्ट, इट इज वाइज टू take an entry in the origin of the engulf and keep my stop loss above the distal line of the higher time frame zone, which is also the source of engulf of another zone on the 60-minute chart. This was the 60-minute demand zone which got engulfed on the left of it. All right. So this is how I go about my trading, and the target, friends, will be decided based on the higher time frame, intermediate time frame, or at least the time frame where you're looking at the candlestick pattern. Are we going to take entry on retest? Obviously, Pradeep ji, obviously we are retest traders. See, this was the source of engulf and this was the origin of the engulf. So we are going to patiently wait for price to again come back to 280.80, and look at what happened. Look at what happened. Price came to it. Price came to it here. Can you see this? Came very impulsively and then crashed, gave the target. So we are retest traders only. We are going to look for retest of our source of engulf or the origin of the engulf. Only then we are supposed to take a trade. All right. So everyone clear with this example? Which part of the chart is not visible? Okay, now it is, hope it is now very much clear. I had zoomed in for you so that you are able to understand where is the source of engulf and where is the engulf happening. Okay, so moving on to the next candlestick pattern. Next candlestick pattern is the shooting star. So shooting star, it appears like this. It is a bearish single candle reversal pattern. Bearish single candle reversal pattern. Market gaps up to the shooting star candle and then it may gap down. But this is the ideal case. It is not necessary that always the gap up and gap down is there. Okay, friends, are you clear with that? And color can be either red or green. It doesn't matter. But if the color is red, then that is more bearish than when the color is green. Only thing that matters is that the upper shadow should be at least 2 times the size of the real body. Okay. It should be at least 2 times the size of the real body, and there shouldn't be any significant lower shadow. Lower shadow should not be there. Significantly, it should not be there. Now, this is the ideal case where I have taken an example where there is no lower shadow, but you may come across some examples where there is some lower shadow. But that lower shadow should be insignificant, very tiny one. And this indicates that there was significant selling at the top. This happened after a rally in price with a big upper shadow, comparatively tiny real body. So that indicates that there was selling pressure here. Bears dominated this in this session, right? So the setup should be that it should be coming in an uptrend. Now, can you see this in an example? There is some lower shadow there. Can you see this? Some lower shadow is visible there, but it is very tiny one. I can just simply ignore that. The confirmation comes when the price starts trading below the body of the shooting star candle. As soon as price starts trading below that, the confirmation is there. The shooting star top is in place in the market. But that confirmation, we are not going to rely on that confirmation, especially in candles where the engulf is there on the low time frame. Our leading indicator or the price action that we are going to heavily rely on is going to be engulf. Now you tell me that if price is moving up, and you remember the blending of candle session. So if price is moving up, this is a rally, okay, and then let's say this is a daily chart. I'm looking at now 60-minute chart. So price is moving up, let's say 240-minute for that matter, because there are two 240-minute candles in a day. And then price comes down like this, probably like this. So if I blend these two candles, so the high is this, the open is this, close is this is green, this is red. So what kind of candle I'll be having? Isn't this shooting star? So green candle and a red candle completely covering the green candle. So if I go on to the further lower time frame, let's say 5-minute now, is there a chance that I may find some engulf there like this on the lower time frame towards the top? There is, right? There is. And that is where I'll be taking my trade. That is where I'll be taking my trade. Now, I don't care in this case, like if this is the case of shooting star, I don't care if the price starts trading below the real body of the shooting star or not. That is the conventional way of taking the trade. How conventional traders do is as soon as price starts trading below that, they jump into the trade, keeping the stop loss above the shooting star's high, and then based on the support they target. That is not how we trade. We are retest traders. We want small stop loss, big RR, right? So let's get into it, how it works. So this was a shooting star. It formed after a substantial rally in price. And as soon as price started trading below that, there was a big fall in price, right? And this was able to hold the price down for at least 5 trading sessions. 1, 2, 3, 4, 5. For 5 trading sessions, price was unable to close above the high of this shooting star candle. Isn't that what I just said? That it is going, the validity of that candlestick pattern is going to be 1 time frame higher, right? So let's check more shooting stars on the live charts. One such example is Nifty only, Nifty weekly chart. Can you see this candle? Tell me, is it a shooting star candle or not? Very tiny lower shadow, significant upper shadow. Upper shadow is at least twice the size of the real body. And where it is forming? After substantial rally in price near a key level or a distribution level on the left, right? Major rally has happened. So this was confirmed on 9th of September. 9th of September. Now, I think we have covered caps with you, caps, right? So onto the lower time frame, just after 9th of September, what do I have? 9th of September. 9th of September is here in this bearish candle. So this is an authentic demand zone. This is the supply that is engulfed. Can't I take a short trade like this, keeping a stop loss above that and targeting the opposite source of engulf? This is the opposite source of engulf. So I found out my candlestick pattern on weekly, went on to the lower time frame, watched for the engulf, took a trade there. This was a cap, basically a key level that we have already studied about. So I took my trade like that, very aggressively. Then I targeted the opposite source of engulf. This was a demand zone causing the supply engulf. And look at it, it worked precisely like that. There was almost 70% retracement from that opposite source of engulf. So I'm taking my profit out at very precise level, isn't it? Market gave a big retracement after that. Now that is secondary, that it never retraced back. It continued its fall, but at least I am booking my profit there, and I'm waiting for some more bearish action to take further short trades. But this was my initial trade. Everyone clear with this example? See, how I approached was, okay. Are you clear that there was substantial uptrend, substantial rally happening prior to that? Yes, I'll come to that. Pradeepji, I'll come to that. Let me just start from the beginning. Are you clear with the substantial up move was already there, and it formed near a resistance area or potential distribution area on the left, right? And this is the shooting star candle. You have no doubt about it, right? So this was weekly. This was happening on weekly chart. I went on to the daily chart. So daily chart is where on 9th of September, my weekly candle closed. As soon as my weekly candle closed, I have the confirmation that yes, the price is creating the top and it wants to go down. So I wait patiently for an engulf. So after 9th September, price simply gapped down and it engulfed this authentic demand. Now a rally-based drop engulfing the opposite authentic demand is a cap for me, right? It is a cap, right? So this much is clear. The entry and stop loss part is clear. I'll come to the target part now. So I planned my aggressive entry like that. It is the origin of the engulf and as well as the source of engulf, and therefore my cap, because it is engulfing the authentic demand zone. This demand zone is not forming as a reaction to any other zone, right? Now just below that, I look for a demand zone. I look left and down. I look for a demand zone which is actually responsible for some engulf. So just below that, I have found this demand zone. So this demand zone, I check. First I find the demand zone, then I check whether it engulfed anything or not. So it did. It did engulf this. This supply zone was engulfed by it. Drop base rally engulfed the drop base drop. Therefore my target was as such. Right? We have to always check in left of the chart. Obviously, the main thing lies on the left of it. The more left you go, the more information you get. Always look at your chart in a zoomed out manner. Only then you'll be able to understand like what is happening there. If you look at it in a very zoomed in manner, then you'll be just limited to this portion. Let's say you are looking at it like this. You'll not be able to understand what is happening in the left, and therefore you'll not be able to keep your target properly. Booking out at proper level is also very, very important, friends. It is very, very important. So everyone's clear with this example. I have similar example for you in Axis Bank. So if you are clear, I'll just move on to the Axis Bank chart. So similar to that, I have, let me just hide everything. Can you see this? Exactly at the same time, there was a strong rally in Axis Bank, and this candlestick pattern emerged near this resistance area or a potential distribution area, very deep inside that. Can you see this? Twice the size of the upper shadow with respect to the real body. and no lower shadow at all. Now color of this candle is irrelevant for me. The prevailing trend and where it is forming, the location of it is more important for me. So what I do is this was again happening on the weekly chart, right? So I go on to the 1 minute, one time frame lower than that. Daily. So daily I have, can you see this? Daily I have like this, that weekly candlestick pattern was confirmed on 9th of September, again at the same time when the the Nifty confirmed that candlestick pattern. Okay, so 9th September is when that was confirmed. I got a gap down there, but can you see that is there any cap forming here? There isn't any cap, right? Now how do I quantify this zone, this drop base drop? It is not engulfing anything. It is not engulfing anything. I cannot simply take a trade like that without giving it some importance, and that importance will only be coming once that is engulfing any zone on the left of it. So is this drop base drop at that time, like here on 12th of September, engulfing anything on the daily chart? No, right? It is not. So I have no choice other than to go on to the lower time frame. Support is also not getting engulfed. See, the nearest support is here. This is basically the SR flip. So support is also not getting engulfed. Now, when I look for supply zones, I need support engulf, not the resistance engulf. Support engulf should be there to take a short trade, not the resistance engulf. The resistance engulf is where I'm going to look for long trades. So the support is very below that, way below that. And friends, understand that as soon as the candlestick patterns, they are there on the price chart, you should be in the trade in maximum 3 to 4 trading sessions. Only then you'll be able to capture the momentary trend there. So try to be little aggressive, but use the help of the engulf on arrival or engulf on any of the time frame, any of the lower time frames. So I have no choice other than to go on to the 60-minute chart. I'll straight away go on to the 60-minute chart. Now, can you see this? That this pattern was confirmed on 9th of September, right? Immediately the following day at the opening hour, it engulfed the opposite zone. This drop base rally, which I have marked here, 598 to 594, got engulfed in this candle. Can you see this? This is not an authentic demand zone. Authentic demand zone is this one. So the authentic demand zone also got engulfed ultimately after that. So a zone engulfing an authentic zone, so the source of engulf is very, very important for me here, friends. Now look at this. This is the source of engulf that I have marked, 611 to 614, and the origin of this down move is here. This is the origin of the engulf, way above that, right? So what should be my next step is, I'll plan my entry and stop loss here. Looking at this authentic engulf, I want to be in this trade as soon as possible. Yes, this is also the bearish flag limit with a tiny, this is a tiny support which got engulfed, right? So that makes this zone a high probability one, especially looking at the follow through of that cap down. Now what I'll do is I'll wait for it to give me entry, and in the process of doing that, price touched this zone. So this is a demand zone for me. Price already touched it and coming up. So I'll look for a zone left and down from here now, okay, to place my target. This will be my target because this zone is engulfing this rally based drop. Opposite source of engulf, friends, opposite source of engulf. So I'll place my target at this level, this demand zone. right? So look at it. It gave me entry. It came down. Now there was again an opposite source of engulf forming here. So that gave another bounce, and ultimately what happened? Look at this. 1, 2, 3, 4, 5, and 6. 6 trading sessions. My target was 13:1 close to that. No, not in 3 days. Not in 3 days. It gave me first entry here. 1, 2, 3, 4, 5, and 6. In this candle, I got my target. But look at the aura that I made there. 13:1. It is nothing other than the engulf. This source of engulfing the opposite authentic engulf, price touching this zone, coming back to the source of engulf. Next fresh opposite source of engulf is here. And that is why you can see that in line with that, price is taking some pause. Price is not able to go down very easily. Now the corrective move is happening on the lower time frame here. I am already out of the trade in the impulsive move. Isn't it amazing, friends? Isn't it amazing? Just 6 trading sessions, you got 13:1. Just imagine the money that you stand to make if you had taken this trade in futures. You'll anyway have to take this trade in futures because you are in this short trade. So any doubt with this? This is just shooting star working here. Now I assigned more weightage to this source of engulf because first of all it is very far off from this origin of the engulf, and secondly it is also the bearish engulf, and it is also the source of engulf of this authentic demand zone, right? And it is all this is happening near a distribution area on the weekly chart. On approach you had 60-minute opposite engulf. Why did you not keep that as target? Now you need to understand this. I think that is not being covered yet. There is something called as the advanced trend or the circuit. So this complete move from this side is one swing, right? From this low to this high is one swing. So I am going to give importance to only the opposite source of engulf on this swing, not on this swing. Because the downtrend has already started here in this swing. This was the upswing, this was the downswing. Okay, so you'll get more clarity on this when we deal with the circuit session, that is the trend advance session. So here in this downswing, I'm not going to give any importance to the opposite source of engulf because they are just corrective moves. They are just corrective moves. Now there is a chance that my zone may be faked out. But at least if I'm doing my proper risk management, I'm booking part profits in between at 2:1 or 3:1, I'll not stand to lose anything in that trade, right? I'll not stand to lose anything. Now this is something which is part of advanced price action, which we'll be studying in the upcoming days. So that is why I did not give any importance to that. But downtrend was not established as daily engulf was not there. See, you remember the trend session? In the trend, did we discuss anything about the down trend happening because of the authentic engulf or the engulf as such? We discussed about the higher high, higher low, and the trend line getting violated. Isn't the trend line being violated here? The steep trend line, the recent one. If I mark it, isn't it violated here? Just at the 12th September candle. Now any opportunity, any retracement above that should be utilized to take a shot. So based on that, I'm planning this trade. And I'm giving importance only to the zones on this upswing on the left of it. Because this was the uptrend and this is the downtrend now. Because of this shooting star happening at the top. Okay. Everyone clear with this example? Everyone clear with this example? All right. So the next candlestick pattern is the hanging man. It is just opposite of shooting star pattern, but the location of it is the same. It is a bearish single candle reversal pattern. It is a bearish pattern, friends. Market gaps up to the hanging man and then gaps down. Now that is the ideal case, may not happen always. Color can be red or green. Red is more bearish than green because it is a bearish reversal candlestick pattern. Lower shadow should be at least twice the size of the real body, and there shouldn't be any significant upper shadow. Everyone clear with this, the structure? Now you tell me, friends, since it is a bearish reversal candlestick pattern, what kind of setup it should be having? What kind of setup should it be having? The prevailing trend, what kind of trend should be prevailing there? Up, down, or sideways? Up, right? Up trend should be there. Now can you see this in this chart? It happened after a substantial rally in price. The confirmation, the price trades below the body of the hanging man candlestick pattern. Now friends, just understand this. Now I said initially that every bearish reversal candlestick pattern is going to have a demand engulf on the lower time frame. Similarly, every bullish candlestick pattern is going to have a supply engulf on the lower time frame. But if I look at this candlestick in itself, then the lower shadow indicates what? It indicates some buying pressure, right? I'm looking at that candle in isolation, right? So I need additional confirmation that that even the engulf on arrival is happening there on my execution time frame. So I need additional confirmation, and that is why I'm going to take use of this conventional confirmation. That is, the price needs to trade below the body of the hanging man candle. All right. So are you clear with this? Like why I'm looking for additional confirmation here? Are you understanding that? Are you able to visualize it? Price may go up, come down, and then again go up, and then close somewhere here. Right? Open here, close here, giving me a red candle, but with a strong lower wick indicating buying. So recently, has there been any supply engulfing demand? In this case, no, right? I need supply engulfing demand to confirm that yes, the market wants to go down. Right? So I need additional confirmation here. If I get any zone there on the lower time frame inside this candle, then I look for engulf on arrival kind of trade. Okay. So let's open one example from our market. Like this was the Sensex chart. Now this happened on 9th of September 2014. Let's check Sensex. What happened with Sensex? 9th September 2014 here. Now can you see this, friends? After a significant rally in price, I have this hanging man pattern. Okay, this hanging man pattern is appearing here. All right. Now the ideal case was that it should gap up and then there should be a gap down, but that is not happening here, and there is some tiny portion of the upper shadow. But the lower shadow is at least twice the size of the real body. Now I need additional confirmation here, so I'll wait for price to close below the low of this candle, and therefore I have this rally based drop. Okay, so I have this rally based drop. Now I can plan my entry like this, I can plan my entry like this, totally up to me. Okay, so let's say I plan my entry like this. Why I'm planning it like that? Because this red candle's upper shadow also indicates selling, right? So I'm planning my trade like that, and what I'm targeting here is this level, because this is basically a bullish flag limit, right? That is my target, little bit above that. So touch, market gave me entry here, 1, 2, 3, 4. 4 trading sessions, target done. This is how I'm supposed to take a trade there. Now, this happened in 2014, so therefore I was not able to go down onto the lower time frame, but definitely if you want increased RR, only thing that you'll be doing is you'll be modifying your entry and your stop loss level. The target will remain the same based on the higher time frame chart. So there must be some engulf on arrival here, some engulf on arrival supported by a zone on the left of this. There must be a drop based drop, engulf on arrival happening here on the lower time frame, preferably 5 minute. I'll be preferring there, and then I'll target this as my profit booking area. So just imagine that I'm already getting 4:1 here, close to 4:1, or probably if I mark this, I take it like this, close to 2.7:1, then definitely at least on the lower time frame there is a very high chance that I may get 10:1 close. Am I wrong in saying that? I just showed you on Axis Bank how I approach my charts. I was not having this data because this is 2014, but are you able to visualize it? And why I waited for some additional confirmation, that is the engulf on arrival on my execution time frame. So here the understanding of blending of candles, the reverse picture of that. See, it is one of the rare patterns. So I was not able to find that hanging man. But when you do the homework, friends, when you do the homework, you'll come across it. It is one of the rarest patterns. So when you do the homework, you'll come across it, and then we'll discuss about it, okay? Then I'll be more than happy to discuss about it, or you yourself try to find out like what is happening on the lower time frame. But at least to give you this understanding, yes, you may find more on the lower time frame, but what I said, don't go below 60 minute, and 60 minute only for intraday trading. If your bias is positional or short-term investment kinds, then don't go below daily. And they have highest probability on the higher time frame. So daily, weekly, monthly and above should be where I should be looking at these patterns. I'm not going below the daily chart to look at these patterns. Like personally, I prefer positional kind of trading. So I don't go below the daily chart to observe such patterns. And I always use them for my scanning. Right. So everyone clear with this example? Everyone clear with this example? Okay. So moving on to the slides. Next one is the hammer. Now friends, hammer is most bullish pattern available there, and at majority of the places you'll get a hammer if the price wants to reverse the downtrend and continue its uptrend. Okay, it is majorly found after a steep fall in price. Okay, it is a bullish reversal pattern. It is a single candle reversal pattern. Market ideally gaps down and then gaps up, but that is the ideal case. Color can be red or green, doesn't matter. Lower shadow should be at least twice the size of the real body with no significant upper shadow. Okay, so this is the prevailing trend should be down because it is a bullish reversal pattern, and this is how it looks like. This is how it looks like. So the confirmation comes when the price trades above the hammer's candle's real body. Now friends, you tell me, like, price is already falling and you get this kind of a candlestick pattern. On the lower time frame, is there a high chance that I may find an engulf on the lower time frame? Buying pressure is there, engulf of a supply zone, price coming down, going like this, going up. Is there a probability of that? Highest probability. So therefore I don't need this confirmation. This confirmation is not required. I am not a conventional trader. And if at all friends, if I don't have the luxury to have that intraday data, like I did not have that intraday data in Sensex. I can simply plan my trade here if I have a zone. Now, if you ignore the color of this candle, just understand price closed here and then simply opened gap up, and it failed to close below this low. So basically this is a drop base rally for me, friends, drop base rally for me. I can simply plan my entry on this time frame itself if I'm not having that intraday data, or if I'm a person who can devote some screen time, I can look for engulf on arrival. Hanging man, see Praveen, understand, hanging man and hammer, structurally it is same, but where it is forming, one is bullish reversal, one is bearish reversal. It is very much important. Hammer is forming after a steep downtrend and hanging man is forming after a steep uptrend. Hammer is more common, hanging man is not that common. Hanging man requires additional confirmation, hammer requires no confirmation as such. Just if you want to increase your RR, you look for confirmation on the lower time frame, that's it. You just go to the recording of this session, you'll get more clarity to it. You make notes then, okay? You make notes like what is the prevailing trend, what is the location of that candlestick pattern. Location is must, friends. In isolation, any candlestick pattern is not going to work. It is not at all going to work. It is going to give you stop loss trades. It is not because wick is long. Yes, the wick is long on the downside and therefore it indicates buying pressure. It indicates buying pressure. So on the lower time frame, this kind of price action may happen there. I can simply plan my entry in this source of engulf and look for big targets. Okay. So I have one such example with me, that is the RCOM. Can you see this? I'll open the RCOM chart for you. Okay, I'll open the BSC one. So can you see this, that after a significant downtrend like this from here, from this place, price was falling. After that, I have this pattern emerging here. Now, if you're clear with the downtrend, I'll zoom it in for you so that you'll be able to see what kind of pattern was there. Are you clear with the prevailing downtrend or any doubt about it? Okay. So I'll zoom in. Can you see this pattern, this candlestick, 24th June 2016? Can you look at it? Now, this is a drop, base, and a rally engulfing this zone. So hammer forming after a steep fall in price and also giving me an engulf. I can simply plan my entry like this, keep my stop loss few ticks below the distal line, and target should be the opposite engulf. The opposite engulf happened here. I'll look left and up, find out the first fresh supply zone, and then quantify it looking at the engulf. So it engulfed this, right? So my target will be that. Now again, I'll not be having intraday data for that. So therefore, I am just giving you this understanding on the higher time frame. So can you see this? It gave me touch entry. It rallied. Okay, it rallied till that area. Not ultimately it stopped me out after that, but it rallied and it reacted from this swap basically. So I should be booking major portion of my holding at this swap. Now if I had taken this on the lower time frame, then I would be relying on 60-minute zone. Okay, 60-minute zone. Okay, look at this. It touched it and then it fell like anything. Now why this happened? Why this happened? The answer to that lies on the left of it. Now what did I say? The location of it is very important. So in location, what else you're going to look at? I said that at my first slide when I was discussing doji. Let's see how many of you are paying attention. In location, what is important for such patterns? What kind of location they should be appearing in? This is a bullish candlestick pattern. So what kind of location it should be appearing in? Yes, the trend should be down for a bullish reversal, and for a bearish reversal it should be up. But where exactly? Where on the price chart? Anywhere the downtrend is continuing, anywhere I get this pattern, I can take a trade. Exactly, Yusuf, exactly, accumulation. So towards the left of it, if I mark a horizontal line, am I getting any data? Friends, that is because this was the all-time low. All-time low was there, and therefore the up move did not last long. The up move did not last long. Ultimately, that zone got stopped out. But at least it's achieved its target, right? Now you may be thinking it is just 1.6 on this time frame. But if you go on to the low time frame, friends, had you been there on this trade, like I personally took this trade and I booked my full profit here, I had executed this trade on the 60-minute chart. Now I'm not having that data here currently, but that was 7:1 trade, friends, 7:1. So that is the possibility with such patterns, friends. What I'm doing nothing, just looking at the engulf and the candlestick pattern and its location. That's it. So are you all clear with this? Are you all clear with this? Okay, now coming on to the next slide, next pattern. That is the inverted hammer. This is just similar to the structure of the shooting star, but again, shooting star was a bearish reversal. This is a bullish reversal, right? This is a bullish reversal. So it is a bullish single candlestick pattern reversal pattern as such. Market ideally gaps down and then gaps up to this inverted hammer candle. Color can be red or green all the time. Color of the patterns is irrelevant when it is a single candlestick pattern. Usually the upper shadow is at least twice the size of the real body with no significant lower shadow. Now in case of hanging man, what I said, hanging man price was going up, forming that drop and then again moving up, indicating that most recently there was buying pressure. Just similar to that, I have price coming down, okay, and then in this case it is going up and then again further up and then closing here above the open. So in this case, can I conclusively say that I may have a supply engulf on the low time frame because recently there was again a selling pressure, indicating the selling pressure on the low time frame. So most recently, can I say that there was a supply engulf on the lower time frame? Can I say that, friends? Anshul, see, you're in doubt, right? You're in doubt. It's totally fine. But whenever you're in doubt, go with engulf on arrival. Why don't you go with engulf on arrival? Right? Why don't you look at the engulf? It may or may not be there, but it is always wise to look for it, right? Yes, the recent move was again a selling pressure. So most recently what price may have done is it had fallen quite a bit, then it opened here, okay, moved up, okay, moved up quite a bit and then again closed here. So open here, close here, giving me a green candle as such, but with significant upper wick. So this is not as bullish as the hammer itself. Hammer is most bullish, friends, most bullish. Similarly, shooting star is most bearish. Shooting star is most bearish among all candlestick patterns. All right. So on the low time frame, I should be looking for some engulf. So here it should be happening in a downtrend. I want reversal. So it should be coming after a significant downtrend. Now in this case, there is some tiny lower shadow, okay, because this is not the ideal case. So the confirmation comes when the price starts trading above the body of the inverted hammer candle. So what I can do is, just in case of hanging man pattern, I waited for the next day's close. Okay, I waited for the next day's close. So similarly here, I'll do the same thing. Now this is a chart of Bank India. Now there was prevailing downtrend. Now this friends is a monthly chart. Okay, monthly chart. Price falling down, and then towards the end of that fall, I have this pattern emerging, the inverted hammer pattern. Okay, and price closed above that. This was basically an accumulation area confirmed after this candle's close. Yes, it is not the bottom most, but very close to that, right? The ideal case is just at the bottom, but this is very close to it. Very, very close to it. Yes, the doji is there. This is the doji. Right. But anyway, any which way, whether I'm looking at doji, whether I'm looking at inverted hammer, or whether I'm looking at some other pattern, or let's say hammer, I'm not doing nothing but relying on the engulf, right? So when it comes to the taking trade part, it is nothing but the engulf that I'm relying on. Again, in accumulation is very much important. Yes, the location of such patterns are very, very important, friends. The location are very, very important. See, the reversal is going to come only from an accumulation or a distribution. If we add 4 candles, it will become a doji. Let's check. Like this is January, February, March, April, May, June. So June, you want me to add these candles. So basically I'll be adding, okay, I'll start adding from this. So here is the close, here is the open. So open here, close here, high here, right? So it gives me a green candle like this. Okay, but this I'm taking that into consideration after June candle close, right? So I'll have to include these 2 candles as well. So this is going to be like this. So you cannot blend any candles you wish. You cannot blend just any candle you wish. It has to be done with the proper time frame. And we'll check this, okay? We'll check this because I have the same example for this when the trade should be taken. But understand that this is on monthly, so imagine that the reversal is going to be huge. This emerged around 63 level, and look at the price. 120, double almost. Double. So Anshul, what you are not agreeing to? If I'm blending the candles, if I'm blending 3 candles, they have to be January, February, March, or April, May, June, like that. If I'm blending 6 candles, it has to be from July to December or January to June. It cannot be any candles in between. I cannot take it like that. Okay. Okay. All right. So let's check Bank India only. Now again, I'll hide everything for you. Now can you see this, that price has fallen quite a bit it had fallen. Now this had formed an accumulation area here. Can I say that this is an accumulation area? Which tab are you talking about? Okay, I right clicked on my chart, tools, the last option of that, hide or unhide tools. So I get this tab. Okay. So after a substantial fall in price, I have this accumulation, price is rallying up. Now what is happening is price is again started to fall, right? Maybe because of some other reason on the left. It doesn't concern me because price is coming into my accumulation area and now I should be looking for reversal structures. So can you see this, friends? After a strong drop in price, I have this inverted hammer, friends, inverted hammer, this 28th of December 2016 candle. And what I should be doing now, can I simply go onto the lower time frame and try to look for engulf? Or I can simply take a trade when the price closes above the high of that. What should be my approach? Lower time frame, right? Exactly. So I'll straight away go on to the 60-minute chart. Okay, I have this pattern confirmed on 28th of December. From 28th of December onwards, I'm going to look at my engulf. 60-minute chart. So 60-minute chart. 60-minute chart, price is moving up, up, up. Recently, like this was 28th of December. Now what I want is this, since this is an inverted hammer, just similar to the case of hanging man, I need a close above that. At least on the lower time frame, price should start trading above it. So therefore, most recently, this was a rally-based drop which got engulfed by this rally-based rally, therefore giving me the source of engulf. All right, it is going to give me the source of engulf. Now this zone is comparatively a bit wide. Looking at the DATR, I may not be able to get out of this trade with very good profit amount in 5 trading sessions. Okay, so therefore it is totally up to me now, friends, whether I take my entry like this or not. Totally up to me. But I want to take an entry further refined entry I want to take. So what I do is, and now my target will be decided here only. I'm looking at the engulf here. So now my target will be, let's say this is the candle giving me the engulf. So above that, I start looking left and up till I get a zone, till I get a supply zone there. So I have a fresh supply zone straight away here. Can you see this? Straight away the fresh supply zone is here. This one is tested. This one is already tested, giving the engulf. So fresh supply zone is here. Now I want to quantify whether it engulfed anything or not, or if I should be looking at a zone above that. So I put my horizontal line there, horizontal line here, and I look left. So yes, it did. See, this is the engulf. This is the zone which got engulfed. So that zone was responsible for this engulf. Can you see this? That should be my maximum target, friend. That should be my maximum target. So if my target is decided and if I place my entry like this, wick to wick, I place my entry, am I getting a decent RR here? Look at it, just 2:1. For positional 2:1, I don't want 2:1. I want more than that. But at least my target is limited. My stop loss is decided max to max. What I should be doing is adjusting my entry. So can I arbitrarily adjust my entry anywhere I wish? Can I do that just anywhere I wish to increase my RR? I should be going on to the lower time frame now. Everything has a logic. Everything has a logic, but at least my target is decided now. And the bias is on the upside. So I go on to the 15-minute chart. And the higher time frame engulf happened on 60-minute. Okay, 60-minute engulf happened. So what I do is I wait for the higher time frame engulf to get tested, and on the lower time frame on arrival there should be an engulf. Can you see this? Price confirmed the engulf on the lower time frame at 10:15. After that I should be closely monitoring the price action on the lower time frame. So you tell me, till this point, till this price action on this upside, around 2 o'clock on 2nd January, was I having any supply engulf? Was I having any supply zone engulf before that? No, right? I just need to wait patiently for price to come down to the to my source of engulf on the higher time frame, and on the lower time frame I'm looking at the engulf on arrival price action entry. I have this rally, 4-5 base candles and a rally, good follow through, my entry there, stop loss below that, and target based on the higher time frame. So look at the RR that I stand to make. Close to 5:1. I'm satisfied. For 5:1 on positional basis, I'm satisfied. I'm getting it with proper logic, not just arbitrarily anything I'm not doing. So are you clear with this? So how I arrived at that? I looked at the inverted hammer. I've looked at the daily zone. So daily, this is inverted hammer, so I need additional confirmation. I waited for price to close above that, at least, or probably trade above that, the high of that candle. Yes, with patience and a lot of practice. Yes, definitely. But it is possible, friends. Look at this. I'm not showing you trades which are happening without any reason. I'm giving you proper logic. I'm associating proper reason with each and every price move. I'm not giving you something which has already happened and then saying in the hindsight. It is very easy to say something in hindsight, especially in technical analysis. But I'm giving you proper logic, right? Step by step, what you should be doing, what you should be looking for. It engulfed this supply. Can you see this? Drop, base, drop. And the engulfing source of engulf was this zone. So therefore my entry was decided like that. Now this zone is not so good enough that I take a wick to wick entry. Even if I take a wick to wick entry, just 10 paisa is there, but why to take even 10 paisa? Why to give it out of your pocket? Be conservative, na, bargain with the market. Okay. So like that, I'm keeping my trade. So if everyone clear with this example, I'll move on to the next example. And today, friends, I'm not going to give you any break because I have still close to 8-9 patterns to cover in a similar manner, discussing more on the charts. Can we buy a few? What do you mean by that, Yusuf? A little more when it goes deep. See, when it comes to trading, okay, there are two kind of traders, the trader simply and an investor. If I'm wearing the trader's hat, I never buy in tranches. Never ever. I want pinpoint precise entries. Why I want to disturb my RR? Why should I be disturbing my RR? I have clear zone here, right? I have clear zone here. Why should I be waiting for price to go down and again then entering the trade? As soon as price action is supporting that, my entry, stop loss, target are in place. That's it. I'm not going to judge this trade now. As soon as my zone is there. Not even for positional trading, Pradeep ji. It should only be there for investment. Okay? investment only, you should be buying in tranches or selling in tranches, not for trading. I never do that. And I'll also advise for you not to do that. Don't disturb your RR. Okay, don't disturb your RR. It is fine if you are getting stopped out here, you look for another opportunity, right? You look for another opportunity. Again, the stop loss there may be, in this case it is 65 paisa, there may be 40 paisa stop loss. You increase your position size and therefore you get good RR there. The RR in that case may be 8:1. You're going to make a lot of money there, right? Losing 60 paisa here, 60 to 70 paisa, close to, including the cost of doing this, 80 paisa, let's say, 40 paisa next time you're making at least 8:1, so 3.2 rupees you're making there, 80 paisa you're losing there. So net you're making 2.4 rupees. So all in all, you're making on your risk per trade, you're making close to 4:1 there, right? So still you're making money. Even if you're getting stopped out once, why lose confidence and why be in a fear of getting another stopped out trade? Look for another opportunity in the same script if your price action is supporting that. You don't need to scan for so many stocks. Okay? And never ever buy in tranches for trading. Never ever do that. So I'll move on to the next pattern. And this was monthly, right? So I forgot to share the monthly with you. So monthly, this was the monthly. That pattern was this. This was the monthly. Price never revisited that area. See, price never revisited that area. From 60 to upside, it went around close to 589. But it took a lot of time, right? 2004 to 2010, 6 years. 6 years, but if you are holding on to that trade with conviction, like basically an investment kind of a trade, then nothing like it, right? Everything that you're making there is tax-free. You're having 10 times, close to 10 times your initial investment in matter of 6 years and completely tax-free. Isn't that great? Isn't that great, friends? So if I check this is monthly, let's check quarterly, what is happening there. So quarterly, I have this. So max to max, like on quarterly, if I do it, then this becomes my zone wick to wick, basically like this. It is giving me entry there. Why is it tax free? Because Yusuf, anything that you're holding for over 1 year and you are not declaring trading profit as your business income, then it will be taxed at long-term capital gain slab, and long-term capital gain in equity market is 0. Long-term capital gain tax is 0. But you need to show that you're not using trading as your business. If you are using trading as your business, then recently in the last budget, there was a clear distinction between trading as a business and just trading or investing for that matter. So yeah, if you are employed somewhere else or if you have some other job, then you don't show trading as your business, and especially if you're an investor. Okay, take full benefit of that. Yes, you need to be employed or you need to have something of your own. Only then you can avoid showing trading as your business income. And it is totally up to you. Even if you have another business, you can still show this as your business income. Okay, totally up to you if your trading volume is that much. Okay. Then checking the half yearly, how it looks like. So we are not anywhere getting a doji there. Okay, no doji is there. Anshul, are you clear? All right. So moving on to the next, bullish engulfing. Okay. This is one of the favorite pattern, friends. This is one of my favorite pattern, bullish engulfing and bearish engulfs. So bullish engulfing is a 2 candle reversal pattern, as depicted in this picture. First candle is a small red candle with a red real body, and the second is a longer green candle which completely engulfs the first candle's body. Body should be completely engulfed. Engulf means enclosing that. Okay, so if it is a bullish reversal pattern, it should be happening in a downtrend. Do you agree? And close to a support, conventional support, or in an accumulation area. Everyone agrees to that? All right. So look at this. Now major reversals happen like this. Now if I blend these two candles together, like open here and the next candle close here. So open, close, no significant upper shadow and significant lower shadow. What is this, friends? This is what kind of pattern? We just studied about it. A hammer. Perfect. Perfect, friends. Perfect. So a hammer is where the major reversals happen. Just opposite of that, we'll be studying the bearish engulf, and that will be shooting star. So shooting star and hammer, they are big reversal and very common price action structures. But the application of the trading part remains the same, friends. Now this in itself is a very strong pattern, so we don't require the conventional confirmation here. Like this here, Jet Airways, it was a quarterly chart. And yes, friends, one more thing. Ideal case is where you have the first candle with a small body, second candle with the big green body, completely engulfing the previous candle, and the volume should also be big compared to the previous candle. This is just ideal case, friends. It may not happen all the time. Okay, it may not happen all the time. Now it happened, it was created near 300 and currently the Jet Airways is around 470 or 480 level. Right, and price never breached this low. Price never breached this low. So I have another example for you. Wherein I'll be showing you how to take the trade. Are you clear with this structurally? Open of green candle is higher. Yes, see, ideal case is where you have the open below the red candle. Okay, open here, close here, next day open below the close. Also, there is a possibility of that, and then it should completely engulf the body of the red candle. All right. So, any more queries with respect to this? All right. So, I have, again, moving on to the chart, I have Asian Paints for you. Asian Paint. Again, I'll hide everything. Monthly chart. Can you see this? After a drop in price, now this area here on the left of it, what will I call this? What am I going to call this area? And the prevailing trend was? Think twice before you're seeing the prevailing trend before the pattern emerged, not here. Here, when the pattern emerged. Pattern emerged here. So what was the prevailing trend? It is a bullish reversal pattern, so all the time the prevailing trend should be strongly down. three big red candles. And then the pattern emerged as a reaction to that accumulation. Okay, and can you see this? The close of this candle was 891. The next candle open was 893, 2 rupees above that. Basically, that is a pro gap. Pro gap. Have we covered gaps with you? Yes, we have. Yes, we have. So pro gap happened here. And price should completely engulf the real body. That is, it should close above the open of the red candle. So open happened at 967 and the close here happened at 970. Can I say that this is a bullish engulf? Can I say that this is a bullish engulf? Right? Now this may not look like hammer on the higher time frame, but who cares? Who cares? After steep fall in price, I'm getting this pattern on the higher time frame, and it is going to last at least for 1 quarter, 1 time frame higher, and I'll be looking for some long opportunities, right? So just after the close of this candle, I'll go on to the lower time frame straight away onto the daily chart. I want big RRs, therefore I'm going on to the daily chart straight away. So after the 31st January that I was looking at the monthly chart, so 31st January is where I have the confirmation of this pattern. And onto the lower time frame, just after that, I have this rally base rally. Now, why this rally base rally is important? Multiple base candles as such. But why it is important? It is important, friends, because it is engulfing this SR or the resistance. So that makes it what? That makes this area rally base rally what? Engulfing the resistance in line with the bases. So am I using something which is not being taught to you or which is conventional as such? This is not just a flag, it is a bullish flag, basically. Bullish flag limit. Now I have decided my area of interest. My area of interest is something which I have already decided. Okay. Now, is it a quality zone as such? Is it a quality zone? 1, 2, 3, 4, 5, 6, 7, 8, 9 base candles. And the layout is also not that strong. It is not having the body above the range of the candle. I mean the range of the base completely. Not a very big reaction can be expected, or the reaction can be expected after only deep penetration of this. At least that much I am able to understand from this time frame itself, right? It is not a quality zone, so price may either trick it a little bit, or it may go very deep inside that zone, right? But that pattern, the bullish engulf happened on the monthly chart, so it is going to give a big reversal, right? It is going to hold at least for a quarter after this. So February, March, April, it is going to last for March. That low will not be breached. At least 99% of the times it is not breached very easily. So the next thing I do is I straight away go on to the lower time frame. Now this zone is almost 26 rupees wide, and the DATR is 19 rupees. If I want very good RR in matter of 5 days, then I have to go on to the lower time frame, that is 15 minute. I would now go on to. So here, like look at this, what is happening. My area of interest was decided as 979.80. For the first time, price touched it on 14th February 2017. So for the first time, it touched it, and therefore I'm going to look at my price action very closely there. Right? So can you see this? There had been an engulf. Can you see this? This area. Drop, pace, drop, pace, rally, and a rally. So an engulf. Engulf happened, and here the source of engulf and origin of the engulf, they are overlapping with each other. very high probability trade. Do I need to go on to the any lower time frame now? The zone itself is very good with a good follow through. Can I simply plan my entry stop loss here? Now, yes, very small stop loss. Yes, close to 1.5 rupees. But understand, if you are getting such a tiny stop loss, there is a very high chance that this zone may be taken out very easily. So plan your target very, very conservatively, friends. Plan your target conservatively. So look for arrival, proper arrival to this zone. So when price is arriving to that zone, like it is arriving here, so at the same time it is engulfing this zone, right? Can you see this? It is engulfing this zone here on arrival. So max to max, my target should not exceed 981.70. It should not exceed that. And still I stand to make 10:1, right? How many candles? 1, 2, 3, 4, 5, 6, 7, 8. 8 15-minute candles. That is how many minutes? 120 minutes. 2 hours my trade is done. 2 hours I already got 10:1 intraday. What more I want? Why should I be waiting for this to continue to hold on further? Why should I be very greedy? Stop loss is such tiny. I am already making 10:1 in 2 hours, right? See, ultimately it stopped it out. But was it able to stop out that daily zone? Was it able to stop out that daily zone? No, right? It did not. The low was 953.85 and the distal line of this zone was 953.60. It was not able to stop it out. It moved on further. Now this is a tiny distribution and price is actually reacting to it. It is reacting to it wick to wick. And I expect it to go further up at least till this level. Basically a swap level. This should be close to around 1100. That is my expectation. But the easy money has already been made. Easy money is already been made. Now that I entered into that trade with a mindset of positional player, I got my trade, I got my target in 2 hours. I'm very happy. Now I may not have held on to my position for the entire target because I always do my risk management. So even if I'm not getting the complete 10:1 because of my part profit booking in between, I'm still fine with it. I'm making money, very good amount of money, at least 5:1 I'm making there. That is my aim. Consistently with high success rate to make 5:1 on positional basis. So isn't it amazing, friends? Isn't it amazing? Very small stop loss, looking at the patterns, looking at the engulf, nothing more than that. Engulf is so important, friends. So important. Are you all clear with this trade? Are you all clear with this trade? How I planned it, where I booked my target, and why I booked my target completely there. Right? So moving on to the next pattern. See, you'll develop that kind of eyes once you go through many charts. At least in initial phase of your learning, you should be going through at least 20 to 30 charts every day. Okay, without break. And also make notes. What kind of price action are you expecting now? Make notes. And why? It should be associated with a reason. Not just that I feel like that it is going up. So it may go up. It should be associated with some price action. Only then you are going to learn, only then your learning curve is going to improve. And once, friends, you start having that kind of move, then that you are expecting it to move up to a certain price level and moves up. Just imagine the boost in your confidence that you're going to have. Just imagine that. And it is, friends, 95% the trader psychology and just 5% technical analysis. So a best technical analysis can be the worst trader also if he's not keeping his emotions in check, if he is not in a positive frame of mind, if he is lacking confidence. Okay, so that confidence boost up will only happen once you observe, make notes, try to predict, and reevaluate if it is not happening and correct yourself. So can I expect that all of you are going to do that? Can I expect that all of you are going to follow such steps? Confidence building measures, and at the same time your technical analysis will improve. Only Pradeep ji is saying that he is going to do it. What about the rest? In terms of engulf of untested zone is better than a tested zone. No. No. You should not be quantifying your zones like that. It is just the authentic zone and inauthentic zone. You have, let's say, this is a zone. You have another zone like this. This is authentic, this is inauthentic. Then you have another case where it is just an authentic zone. So engulf of case number 2 and engulf of case number 1 with first demand A. This is more powerful, the engulf of that, than the engulf of this. Because buying emerged here, and this zone, the demand zone A, formed as a reaction to this level, and fresh buying did not emerge there. So if it is getting engulfed, like in case of 2, then this is more powerful, and the source of engulf of this zone is the best to take a trade in. Price traversed in first case near to the zone. Yes, but ultimately, when it comes to the taking trade part, my zone, see, I'm going to attach more weightage to this level, the source of engulf of the second zone, than the source of engulf of this zone. Suppose 2 is tested once and after some time it is engulfing. Anyway, it is an authentic zone. If it is tested, I don't care. Still, if it is ultimately getting engulfed, then still I'm going to give more weightage to this price action than this one. It is just about authenticity and inauthenticity. That's it. Whether it is tested or not, I am not bothered about it. But when we conducted a swap session with you friends, you remember what I mentioned, that if the zone is taken out impulsively with a proper location, then it is going to act as swap. The price is not going to retrace to the source of engulf, it is going to react from the engulfed zone itself. And that is where, whether it is tested or not, the quantification of that comes. But when it comes to the engulf trading, the test happening or not is not at all relevant. All right. So are you clear with this, Anshul? So if yes, then I'll move on to the next example. Just opposite of this is the pairish engulf. Can we say similar for SR? How? Anshul, can we take this query towards the end of this session, because I have still seven patterns to cover. So with examples, that is going to require, I think, probably another 40 minutes. So can we address this query towards the end? Okay. So bearish engulf, just the opposite of that. Okay, just the opposite of bullish engulf. So bearish reversal is where you have 2 candle reversal pattern. First candle has a small green real body. Second candle has a red real body, which is completely engulfing the first candle's real body. So the structure should appear after a steep uptrend like this, completely engulfing the body of the previous candle. It is very strong, very powerful candlestick pattern, so conventional confirmation is not required. And the volume condition remains the same. This was the pattern which emerged in Nifty. This is a novice gap up happening at all-time high. This was the day when there was a surprise rate cut by RBI. Price made a high of 9119 and price fell from that level to around 6,800. All-time high. All-time high is also somewhere where you should be looking at. It is not necessary that there should be some resistance or a distribution should be there, but the reversal that is going to come from that level, it is going to come only when a distribution in itself forms at that level. You remember the RCOM? It did not give much bounce because it is not supported by any other time frames on the left of it. But why it fell like that much? Because first of all, it formed that pattern, gave some correction, and then ultimately a distribution emerged at that place. Monthly supply zone was formed. All right. Friends, can I please have a glass of water, please? Give me just 1 minute. I'll be back. So we were discussing that this pattern emerged near all-time high, and why was there such a big reversal? Okay, so you cannot be holding on to this short trade for quite a long period because you are not having any distribution or any resistance on the left of it. Okay, this was happening at all-time high, right? So there was some additional advanced price action which emerged at that place, which gave this corrective move. It turned this corrective move into an impulsive downtrend. Okay, but the candlestick patterns, that is why they are said that they are conventional. They are conventional candlestick patterns because they are not going to give you that complete big up down move from that level, but at least you'll be able to make money there. Right. So that is what I wanted to give you here. So I have an example of this as well. Are you clear with this structurally? And how this is going to look like if I blend these two candles together? Okay, like this. Open and then close. That makes this candle red. What is this, friends? What kind of candle I am having when I blend these two candles together? This is not hammer, Pradeep ji. This is not hammer. Hammer is something like this. This is hammer. This is also not hanging man. And friends, you don't need to remember the candlestick pattern names as such. Tell me whether it is bullish or bearish. It is also not bearish harami. We have not covered that yet. It is bearish or bullish, and whether it is a strongly bearish candlestick pattern or a bullish candlestick pattern, just forget the name. Doesn't concern us. Shooting star bearish candlestick pattern because of significant upper wick. Right? So it is a bearish reversal candlestick pattern happening after a steep rally in price. You should be looking to sell. Simple as that. If within the next 2-3 candles only you should be getting that fill. You should be a little aggressive, little adjusting with the market condition. All right. And just try to not to remember the names. Just understand what is happening. Price action is most important. So I have power grid for you. Again, hiding all the tools. Now, the the previous candle, like I discussed that the previous candle should be green. That is the ideal case. But here near this resistance area, like this was happening near all-time high, and recently I had this resistance area, and I have these two candles here. Not an ideal case, but still, what kind of a candlestick pattern is this? Is it a bearish engulf? Is it a bearish engulf? Price covering the previous candle's body entirely, gapping up and then closing down. So what kind of opportunity I should be looking at? Buy or sell? Sell, right? Sell. Now this candlestick pattern is happening on the daily chart. On the daily chart, I'm observing this. So if you are looking for selling opportunity, max to max, what kind of holding period you should be looking at? 1 week or beyond that? Max to max 1 week, or if your target is achieved before that, 5:1 is achieved, then close out your position. Okay, so let's check what happened. Now this happened on the daily chart. So I'll straight away go on to the 60-minute chart first. So 60-minute, here I'm having this drop is there, but at the same time happened on daily after consolidation. Yes, but majorly what was the trend here? Look at this. Huh? What was the trend, prevailing trend? Now it may happen as a part of consolidation, but the prevailing uptrend is there. Prevailing uptrend was there, significant uptrend was there. And friends, whenever such strong candlestick patterns they appear, you should be basically a little aggressive there. You should try to be in that trade the very next day. The very next day, if you try to be in that trade, you're going to get the target very soon. So I went on to 5-minute chart. 5-minute chart is where I was looking at. Now the close of this day happened on 22nd February. So here, can you see that drop base rally got engulfed here? This is the source of engulf. Okay, this is the source of engulf. Look at this. My entry was this, and the target was based on this support area here. The support, the minor support basically, which was held for a longer period, gave this substantial up move, was my target. And look at this. At the opening tick, I got my entry. Now, why I kept my stop loss like this is something based on the advanced price action concept. But for you, I'm going to keep it like this so that you are not confused. Okay, above the origin of this down move. This became my intraday trade, and I got almost 3:1, close to that. Entry there in the source of engulf, stop loss above the origin of the engulf, and targeting the minor SR. Now I believe till this 202.85 is not taken out, price will go down to 190, 140. Why? Because on the 60-minute chart, the opposite source of engulf, if I look at it, fresh opposite source of engulf is straight away down here. This is the opposite source of engulf, and that is why price is going to go down to that level till the point that 202.85 is not taken out. So this became my intraday trade, and if I want to hold on to this position, I may have held on to this position for quite longer period. Now, if I would have taken my target as 190, 140, then look at the ARA that I stand to make. That is still not achieved. Almost 11:1, friends, 11:1. So observe this Observe what happens and don't jump into this trade, friends. Don't jump into this trade. Just observe. Okay. The easy money has already been made. Part profit has already been booked. So even if it stops us out, we are not going to lose anything. Okay. So are you clear with this? As soon as the pattern emerged, I went on to the lower time frame. Firstly, I went on to the 60-minute chart. 60-minute chart, the zone was a little bit above that. I wanted to be in the trade at the very beginning of the next trading session. Okay, there was nothing to hold on to this price on the left of it. Everything was tested. All these zones were tested basically. Nothing till this 190-140 level. That is why I wanted to be in this trade, and especially after a rally in price, if you get a lower high on the daily chart, there is a lower high. Okay, after a rally in price, you get a lower high in price near a resistance area. Price is bound to fall. Price is bound to fall. There is something more advanced which you are going to learn about. So just keep this picture in mind. Just remember this. And price is going to come down all the way down. Even this swap is tested as such. The swap is tested. Can you see this? Yes, Hemanji, this is compression. Yes, but the application part of it you are going to learn in the upcoming sessions. But just remember, you revisit this chart. Okay, revisit this chart once that session is conducted. But that is why my bias is like that. Most recent example, friends, and the target is full target is yet to be achieved. Okay. So this is the bearish engulf going on, and the volume condition. Let's just look at the volume. Look at the volume. Look at the volume. Now, volume is something which we don't necessarily look at. It is irrelevant, basically. Just to give you that understanding, just for the sake of your knowledge, I'm giving you this. Volume is what the conventional traders look at. I am least bothered about it. All right. So volume condition is also satisfied. So moving on, the next pattern is the piercing pattern. Piercing pattern. The name suggests that something is piercing something, right? So it is a bullish two candle reversal pattern. Two candles reversal pattern. Like the structure is like this. First candle has a red real body. A red real body. Second is green candle, which generally, that is the ideal case, opens below the red candle and it closes in the upper half of the first candle body. Upper half means the high of this candle minus low of this candle, half of that, just the midline of that. It closes above that, above 50% of high minus low. Let's say high is 20, low is 10. So it should close above 15. If the close is happening even just one tick above 15, it is piercing pattern. Especially if the prevailing trend is down and it is happening near a support or near an accumulation area. Okay. That is how I decide that the candlestick pattern is as such. See, the candle body, that is the ideal case. Now, candle body in this case is what? Isn't it a high minus low? That is the ideal case I'm saying. Ideal case. It may not always gap down. This is a novice gap basically. So even pro gap may happen. Okay, even pro gap may happen. So that is why, to ensure that, you need to take high and low, not just the body, not just open minus close. High minus low is what you should be taking. And any which way, you tell me one thing. If this pattern is emerging don't you think there will be, whether it closes 50% inside the above the body or just above the range of the candle, the pattern on the low time frame won't it be like this? Supply getting engulfed. And what are we more concerned about? What are we more concerned about? Are we trading the conventional way? We are not, right? So we want the price action supporting that. So price action supports only when we have an engulf, right? So we have this pattern forming after a downtrend, okay, forming after a downtrend, and this pattern in itself is also very bullish pattern, but it is not as bullish as that of the hammer or bullish engulfing. It is bullish, but not as bullish because the price is not able to close above the red candle's high. So it is not, it is midway between a bullish engulf and a hammer, basically. So it is not that bullish, but it is still bullish. Okay, so we don't require the conventional confirmation that the price should trade above the real body. Okay, it should not be something which we should be looking at. So look at this. This was Dish TV. Okay, after a fall in price, there was a support there on the left of it, and this pattern emerged. So I have one example for you, very recent one. Havels. Again, I'm going to hide everything. Now, what kind of a trend is this? Down, steep down, right? And if I zoom this for you, then these two candles is it closing above the 50% of the range of the red candle? These two candles, 22nd December and 27th December. I have reversal there, right? But am I having any zone here to take a trade on? Am I having any zone there? No, right? What should be my next step? Lower time frame, straight away 60-minute. Right, I don't follow 240-minute or any other time frame above 60. I straight away want to jump into the 60-minute. Now, can you see this? This drop base rally, it engulfed that rally base drop. The pattern was confirmed on 27th of December, and at the same time when the day closed, at the same time I had that engulf on the lower time frame, on the 60-minute chart. So higher time frame, like daily chart, pattern emerging, giving me the trade. 60-minute chart, I have the source of engulf. Inside the source of engulf, I have another engulf. Okay, my target will be the next fresh zone, next fresh supply zone, which is engulfing the opposite zone. So here the pattern confirmed. Okay, here the pattern confirmed, price had already touched it. Okay, so the next fresh zone is on the way up. So next fresh zone is this. Now I want to quantify that, so I have this demand getting engulfed by that. So that is my maximum target. I cannot plan a target beyond that. 355.60. Are you getting this, friends? Are you getting this? How I am deciding my target? I'm looking left and up in case of a supply zone. I'm trying to find out, no, the target is based on the 60-minute, because 60-minute is where I'm looking at the engulf. I'm not looking at the engulf on daily chart. So if I'm taking a trade in the 60-minute source of engulf, my target will be 60-minute opposite source of engulf. Okay, every concept, cap demand has a cap supply as a target, MIP demand has a MIP supply target, source of engulf has a source of engulf target, but all of these are on the same time frame. Okay, all of these are on the same time frame. So if I'm looking at 60-minute source of engulf, my target will be 60-minute source of engulf, opposite one. Looking left and up, first supply zone is this, fresh supply zone. Quantifying that, yes, it engulfs this demand. Whether this demand is authentic or inauthentic, I don't care. I'm booking my profit there. So I go on to the lower time frame, 5-minute, straight away. Now, look at this closely. Again, I'll hide everything currently to give you this clarity. Is this a supply zone, rally based drop? Is this a demand responsible for that engulf? Price ultimately closed above that, right? Here in this candle. Can I take a trade here? This is inside the 60-minute source of engulf. Why no, हेमंत जी क्यों आपको लगता है इसमें नहीं लेना चाहिए? अच्छा फॉलो थ्रू आया है, 60-मिनट जोन के साथ कोइंसाइड कर रहा है, डेली पे पियर्सिंग पैटर्न बना है. दिस इज द ओरिजिन ऑफ द engulf एज वेल एज द सोर्स ऑफ engulf. यहीं से तो प्राइस ऊपर गया है, प्राइस मैक्सिमम यहाँ आया नीचे और यहीं से गया है, तो यही सोर्स ऑफ engulf है और यही ओरिजिन ऑफ द engulf है. दोनों एक ही है, अच्छा फॉलो थ्रू है, सिंगल बेस है, मूव इन भी स्ट्रांग है. क्यों नहीं लेना चाहिए? और सेम टाइम ये प्राइस 60 मिनट से कोइंसाइड कर रहा है, बट प्राइस डिडंट गिव फिल ऑन चार्ट. तो क्या इसलिए ट्रेड नहीं लेना चाहिए? हमें तो वेट करना है ना. तो मैं अभी आपको बता रहा हूं वो चीज की कैसे हम लोग आएंगे उसके ऊपर. अभी मैंने आपको जूम इन करके इसलिए बताया कि मैं आपको बताना चाहता था कि ये engulf हुआ है, इसीलिए ये जोन के ऊपर वेटेज दिया जा रहा है. We are looking into this zone because this zone has engulfed this supply zone. Okay. Still, are you not getting my voice properly? All right. So if not, then please try checking your. Okay. So you go through the recording. You go through the recording once again. So this is actually coinciding with the 60-minute. 60-minute it was coinciding with, and that is why I relied on that zone on the 5-minute. So 5-minute zone was there, and my target was decided based on 60-minute opposite source of engulf, right? So price came there, touched it, look at my stop loss. Now you must be questioning me here. Now the question should be coming to your mind. If it is not coming, then I'll not answer that. But this is the trade. Look at it. The target is based on 60-minute level, and look at the RR. Like in how many days the RR was achieved. One day this gave the entry. Second day it touched the engulf zone swap basically, and third day it achieved its target. Very, very small stop loss. Is that your question? Why the stop loss is very, very small? See, the stop loss is very, very small. Therefore, we have, stop loss. I am not deciding stop loss just on my own, right? I am doing what only I taught you. 3 ticks below the distal line. The distal line is at 319.15. 3 ticks below that is 319 only. Yes, हेमंत जी आपने सही पहचाना कि यहाँ पे एक लेवल ओवर लेवल भी है. यहाँ पे एक लेवल ओवर लेवल भी है. तो मैं क्या कर सकता हूँ कि मैं मेरा स्टॉप लॉस एडजस्ट करके यहाँ ला सकता हूँ. और स्टिल मुझे 5:1 से अच्छा जोन, अच्छा ट्रेड मिल रहा है, राइट? तो मैं इस तरह से ट्रेड ले सकता हूं, राइट? आई कैन टेक अ ट्रेड लाइक दिस. आई एम स्टिल गेटिंग मोर देन 5:1. And what is this, friends? This zone, the lower one. What is this? You have already studied this. Resistance, high, retracement, and then high engulf. What is this? This area. Friends, you are mistaken. Resistance getting engulfed, price moving up, creating this high, retracement, then again engulf of that. This is MIP demand. So you are going to do a trial and error with me, right? BFL, OE, like that. Why are you not clear with this? But since it was coinciding with such a good 60-minute zone, and at the same time there was a piercing pattern, there's a very high chance that since this zone is also very good in structure, price may not retrace to this level. So I may choose to take a trade like this. How can it be a BUFL? Is the resistance line passing through it? The recent one, this resistance already got taken out. This is the recent resistance. Is it passing through that? It cannot be a BUFL. How can it be a BUFL? BUFL is always a continuation pattern, rally-based rally. Similarly, BUFL is a drop-based drop. At the same time, the recent most SR should be passing through it. Okay, it is not so. Yes, 2 base candles, so that doesn't concern us whether they are 2 base candles or 5 base candles. If it is engulfing something, that is how we quantify it. Which zone are you talking about? This one? Is this the one that you're talking about? In this case, there is MIP, OOE, and a cap. Yes. Okay, so you're not talking about this. Then this is the same chart, 5 minute. This is the source of engulf. Below one is the cap. Resistance. Resistance you're talking about. I'm not getting you, Yusuf. What are you trying to say? You mean to say it is passing through this resistance? So this makes this rally-based rally powerful. Is that so? Was this rally-based rally happening after my piercing pattern? My piercing pattern was confirmed on 27th December close. So can I take a trade before that? Is this supported by any of the higher time frames? This is something which you should be thinking twice about. Is it supported by any of the higher time frames? Yes, it is a BUFL, no doubt about it. No doubt about it. But not every trade not every level we are going to take a trade in, right? It should be supported by high time frame and price action. So that is why we are not relying on that. And the pattern was confirmed only on 27th December's close. All right. So everyone clear with this trade? We are still able to make 8:1 there, keeping my stop loss like that. And friends, there is something more advanced which you'll be learning in the upcoming sessions, and therefore you'll be keeping your stop loss like this. Okay, you'll be keeping your stop loss like this by learning something more advanced that is called as the MPL. All right. So that is why it was planned like this. But your question is valid, that why I'm not giving any relevance to the lower level. There's a level near level case. Okay, so your question was very much relevant, and that is why I answered it. So this covers the piercing pattern. Next is the dark cloud cover, just opposite of the piercing pattern, dark cloud cover. just opposite of piercing pattern. So it is a 2 candle reversal bearish pattern. First candle is a green candle. Okay, first candle is a green candle body, green candle real body. Second candle is going to open above the green candle and close in the lower half of the first candle's body. As such, this is the ideal case or the conventional way of looking at it. But how I mark it is I take the high and low to be safe. All right. So, friend, is my screen stuck? Is my screen stuck? Anshul, I think there is. Okay, great. So it is a bearish reversal structure, so it should happen after a strong uptrend, right? Right. Again, this is not as bearish as just the bearish engulf that I discussed. And we don't require additional confirmation. So we can simply take a trade based on the engulf, because price is anyway most recently going down. So there will be a demand zone engulf on the lower time frame. This is the Dabur chart. Now friends, this trade was personally taken by me quite a while back in 2015, around April or May, April I guess. So I may not be having a data there, but it gave me intraday, it gave me 13:1 on intraday basis. 5-minute execution, 13:1 was my target. Okay, but I'll give you more example, most recent example, so that you just don't take it on my word. Okay, so we have Maruti for the dark cloud cover. Again, I'm going to hide everything. Can you see this? What is the prevailing trend here? What is the prevailing trend, friends? Up, right? Up. Is there something on the left of it? It is at all-time high. Should you be expecting very big reversal from this place? Should you be expecting big reversal from this place? Not currently. It is not having any distribution. But at least if it is on weekly, it is going to hold for at least how many days or how many sessions, how many weekly sessions? 1, 2, 3, and 4. That makes it a month. Isn't that something what I just said? Right? So this is the dark cloud cover. Can you see this? It is closing below the 50% of the candles range. Are you able to see it now? It is able to close below 5807. Right. So what I should be doing now is, this is weekly, I should be going on to the daily chart, right? And the next key level on the lower time frame, like on this time frame, the key level, is this rally, base rally, a key level? Can I say that? Is it engulfing anything? Is there something on the left of it? No, right? The next key level is this one, because it is engulfing this resistance, right? So it should come down. If at all it is not going to reach the high of that, it is going to come down to 4980. See what it did, from where exactly it reversed, right? So I go on to the daily chart, but on daily that pattern was confirmed on 4th of November. So 4th of November, and remember friends, I want to be in the trade in the next 3 sessions maximum. Okay, and this pattern is bearish, but not as bearish engulf. So max to max, I'm going to wait for 3 candles there. So here I'm having this drop base drop as my level. But is this drop base drop, like this is the 4th November candle, is this drop base drop worth taking a trade in? Because is it engulfing any zone on this time frame? Is it engulfing anything? No, right? Neither the support is engulfed nor the zone is engulfed. So I'll go on to the 60-minute chart. No choice I have other than that. So on 60 minute, can you see that when the 4th November, like this is the 4th November chart. So here the price actually and the 60-minute supply engulfed the 60-minute demand. I have the source of engulf. Opposite source of engulf, now let's check. So the opposite source of engulf is where? This is the opposite source of engulf. Can you see it, friends? I look left and down, I find a demand. This is a demand. Now I check whether it has engulfed anything or not. It has engulfed this zone. So that becomes my maximum target, right? Now, if I plan an entry like this and put my stop loss above that and target like this, am I getting a good RR? Not even 2:1. Now, what should be my approach? Lower time frame. Okay. Now, friends, this is happening near all-time high. You need to understand that if it is happening at all-time high, the reversal will be very steep, especially with the dark cloud cover happening on the weekly chart. So now my approach should be 1 minute, 2 minute, 3 minute, 5 minute, like that, till the point that I am having a good zone, good engulf on arrival, price action entry. Let's check 1 minute, and it should happen very close to my 60-minute zone, very close to it. So price was coming up, like the pattern was confirmed on 4th of November. The very next day I'm observing this. So what happens? The very next day, can you see this? This demand got engulfed by this supply. Now there are two things here. This is the source of engulf. Everyone agrees to this, and that the above one is the origin of the engulf. Origin of the engulf, source of engulf. Now I am in this trade for big target. Am I in this trade for just corrective short move on the downside? See, both are getting respected. So if I'm in this trade for big target, I should be relying on the origin of the engulf. I may choose to take an entry in the source of engulf. That is totally up to me, but the stop loss should at all times should be above the origin of the engulf. Yes, we should rely on the origin of the engulf if your source of engulf and origin of the engulf are so close by and you are in it for a big target. All right. So what you do is you ignore the source of engulf, you look at the origin of the engulf, you plan your entry like that, stop loss above that, the origin of the engulf, and the target is this, the 60-minute opposite zone. So how much RR are you getting? And in how many days? 1 day, 2 days. You got entry the very next day after the pattern was confirmed. Okay. By the very next day, you got your target. Almost 110 points you made. Close to 10:1. Touch trade. No drawdown onto your position. Touch trade. And see, it bounced from that level. So I was not wrong in booking my position there. Okay, price was not moving down impulsively at the time. Are you clear with this trade? Are you all clear with this trade? I have just 4 more patterns to cover. So please bear with me. I've already extended today's session by 36 minutes. But are you clear with this? That your clarity is more important now. I want to be in the trade in the next 3 sessions looking at the pattern. Okay. So now what I do is I'll be, if you're clear, I'll move on to the next pattern. You're clear? Okay. So the next pattern is a Harami pattern. So we have bullish and bearish Harami as the reversal patterns. All right. So bullish or bearish Harami pattern is a 2 candle reversal pattern. So Harami in Japanese, it means pregnant lady. Okay. So this is the lady and this is her baby, like that. You can think of this in that manner. Okay. So that is why it based on the structure of it, we are calling it as the Harami pattern. First candle continues the trend direction. Second candle, real body is contained within the first candle real body. This candle may be either green or red. Okay, it can be green or red. It doesn't matter. Ideally, it should be of the opposite color, but it can be green as well. Like in this case, the green candle is there. This can also be green, but the body should be contained inside this candle's body. And ideally, there should be a pro gap. Pro gap should happen, right? But this pattern is not as strong as the bullish engulf or the piercing pattern. Okay, not as strong as that, but it is a pattern which is having some importance for us. So let's check some examples. It should be, if it is a reversal pattern, it should be happening in a trending market, right? So uptrend, for uptrend, it should be having a bearish reversal. For downtrend, it should be having a bullish reversal, right? And in this case, the recent most price action move is, in case of a bearish reversal, is on the downside because of this red candle's color. Had this been a green candle, then you require additional confirmation. Then you're going to take help of this. The price trades above the pattern for a bottom reversal or below the pattern for a top reversal. So had this candle been a green candle, price needs to trade below the real body of that candle. Only then the top is going to be considered, that the top is in place. Everyone clear with that? Everyone clear with that? So I have these 2 examples for you. These 2 examples. Left one is the bullish Harami pattern, red and then green after a fall in price. Then after a rally in price, green and then red. This is the ideal case, friends. Very rarely you'll get the candlesticks of the same color. Very rarely. And only in scripts which are not that liquid. And any case, we are not going to trade scripts which are not that liquid. So this is the bearish Harami. Okay. Structurally, are you clear with this? See what is happening here essentially. After a fall in price, you have bullish Harami and then you have bullish engulf. Are you able to visualize it? Are you able to see that, friends? So bullish engulf is more powerful because look at the move that is happening after the bullish engulf. Complete trend reversal. And just after the bullish Harami pattern, price is consolidating there in this red candle. Similar is the case here. This is the bearish engulf. Consolidation after the bearish Harami. And then after the reversal, price fell like anything. In any case, we are going to rely on just the engulf, right? So let's take examples of the 2. I have Infi. Again, I'm going to hide everything. Now, after a steep fall in price, okay, after a steep fall in price, I'm having some pause here, right? Now, this is a case where I just said that the color of the next candle, it doesn't matter really. So can you see that these two candles here, these two candles precisely, what kind of a pattern is this? After a strong fall in price and with a minor support in place near a quarterly zone. What kind of pattern is this? Bullish Harami. So we wait, right? We wait for price to go above that, right? I just mentioned that if the color is the same, then we wait for price to go above that, and additionally we wait for some engulfs. So if we do that, then aren't we having this engulf here? Aren't we having that engulf there? We are having it, right? We are having that engulf. So now the trade bias is confirmed. You're going to take a long trade here. Okay, now what should be the target? Okay, now the low here is actually low below the distal line of this and very close to that. Minor support is very close to that. So if at all I am keeping my target, I'm keeping my entry there, my stop loss should go below this low. This low is very close to my distal line, and the actual buying, it emerged from this place. Okay, it emerged from this place. So I should be including that in my stop loss. Now there are two ways to take this trade. Firstly, you need to understand that if you are not having a very clear opposite source of engulf, very clear one, then you look at, I took this trade and my stop loss was below that green candle but exit early. Okay, Hemanji, now you'll understand what should have been your approach and what should have been your target. Now can you see that this is a distribution? Can I simply ignore it? Can I keep a target beyond it? No, right? I should not be doing so. Now there are two ways to take this trade. First one is of that person who does not have a time to devote for the market, in the live market. So what he's going to do is, see, already there is an engulf on the daily chart, but the stop loss is not that great. Like it is close to 24 rupees stop loss, almost 1 DATR. I don't want that. I mean, you should not be thinking of that in that term. So what you do is you go onto the 240 minutes chart first. As such, the zone on the daily chart is very good. 3 base candles, strong movement, strong leg out. And in the leg out, single leg out, the zone is getting engulfed, the opposite zone. So I go onto the 240 minute chart. Now here, okay, so here this is my drop base rally base, basically consolidation candle with a gap up. So my zone is like this. The opposite zone is this. This is the opposite zone engulfing this demand, right? And shallow test was there. So that is why I'm not ignoring that. And it is forming as a reaction to this distribution level. So that is why I'm not keeping my target beyond that. So at all times, my target will be that. So if I'm planning an entry here, my stop loss below this green candle's low, my target like this, I'm getting close to 4:1. I'm fine with it. If not, and I'm a person who can devote some screen time, what I'll be doing is I'll not be entering this trade on 240 minute. Okay. And even if I go on to the lower time frame, lower than this, then this is going to be an accumulation only. This is consolidation happening and accumulation. The 60-minute zone is going to remain at that place only. Right. So I'm going to go on to the lower time frame, further lower than 60. And basically I'm going to wear the hat of a person who can devote screen time. Okay, straight away, like that is my area of interest. That 240-minute zone is my area of interest. So I'll go on the 1 minute chart straight away. So on 1 minute, for the first time, price touched it, it faked it out. Friends, this is a learning for you, and you're going to have a separate session of fake out. Whenever fake out happens, big reversal happens. Now, what kind of fake out was that? How the reversal happens, that you're going to learn more in detail in the upcoming session. But you should not be losing interest in this long trade now. Okay, we were looking for engulf on arrival. That did not happen. Price faked the zone, the area of interest out. But as such, our initial zone, that is when we are planning to take our stop loss, keep our stop loss below that, that zone is not taken out. If I mark it that way, it is not taken out. Okay, so I'm still relying on that. I'm still relying on that. So what I do is I wait for price to again come very deep inside the zone. And since the fake out has happened, this will be additional learning for you, that you wait for higher low to form after a fall in price, and then after the higher low is in place, you wait for the engulf. So can you see this? I'm zooming this for you. Higher low, and you have the engulf of an authentic supply, right? So you keep your entry like this, you keep your stop loss like this, and target the 240-minute zone. Look at the RR, friends. Look at the RR. Look at the RR. And I'm not going to hold my entire position till that point. I already got 2:1 here. I got my entry here. First time entry was achieved at 9:50. By 11:25, I got my 2:1. I'm going to book my 50% there, making this trade an emotional less trade. And look at the RR ultimately it gave based on the 240-minute chart. Opposite engulf on 240-minute. What is the RR, friends? What is the RR? So, Hemanji, are you now clear with the approach? Seems everyone is blown off looking at the RR, right? So isn't that amazing? Isn't that amazing? And see, that is definitely going to require some patience, right? This 51 times is not going to happen overnight. Okay, so how many days it took? This happened on 1st of Feb. The entry was achieved on 1st of Feb. This is the power of higher low, friends. After a steep fall in price, higher low formed, and that engulfed the authentic supply zone. And the target was achieved on 16th Feb, almost 2 weeks time. Almost 2 weeks time. This is trade of the month, friends, trade of the month. Okay, trade of the month. One trade like that is going to make sure that even if you get next 50 trades as your stopped out trades, you'll not lose anything, provided you are keeping the same risk per trade. Okay. This is the power of engulf, friends, power of engulf. So just opposite of that, I've already exceeded my time quite a bit. So I'm simply going to cover the patterns now. Just 2-3 patterns are remaining. So just opposite of this is the bearish Harami pattern. I have NMDC. You look at the NMDC chart, NMDC daily chart. Okay, you look at it. You are going to understand what is happening there. Do this kind of analysis there. You'll get more clarity. So I'm just simply going to take you through the patterns. So morning star is basically nothing but move in, consolidation, and a move out. simple that we are all aware of. We have already studied this pattern in price structure session. How many of you remember this? This also a bullish reversal pattern, not as bullish as the other patterns, but still worth considering. It is called as the morning star. Okay, why morning star? Because sun is rising. Basically, sun is rising. Here the sun is rising like this, like that. Okay, so generally, ideally, there is a gap down and a gap up. That is the ideal case. Not always you're going to get that. Okay, not always. So you want more clarity to this? This is simple drop base rally. You want more clarity to it? Hello? Okay. So opposite of drop base rally is what, friends? Yes, sure. I am never tired. You should just tell me. Yeah. Only thing is, if you are not tired, then I'll answer. Yeah, tell me. Okay, so meanwhile, Yusuf, you type your question. I'm going to take you through the setup, how it looks like. So it should be forming after a downtrend. Okay, after a downtrend. Now, ideal case was there should be a gap down and a gap up. Now, in this example, you're not having that. So it is a simple case of drop base rally. You'll get plenty of examples of such structures. Okay, and confirmation is not required because the recent most price action is on the upside after a steep fall in price. So the engulf will be there on the lower time frame. So we don't require additional confirmation. It is just for the sake of your knowledge that it should start trading about the real body of the long green candle, that is the move out candle. Okay, an example of that is this. You had anything to ask, Yusuf, or you just wanted me to explain this in more detail, like I just did? Okay, okay. So this is just simple a demand zone. Demand zone on the lower time frame. In this candle, you'll be having some supply getting engulfed here, right? And that is why it is working. Okay, price moving up. This is monthly chart, so it is going to hold for at least 1 quarter, and it did more than that actually. So after that, just opposite of drop base rally is what, friends? Evening star, sun is setting basically. So what is that? Friends, it seems you all are tired. Actually, I am not. So, so just opposite of that is what? Rally based drop, bearish structure. Right, again 3 candlestick pattern structure, reversal pattern called as the evening star, opposite of morning star. Okay, it is a rally based drop, basically gaps up, the base gaps up and then there is a gap down the next day. That is the ideal case. It does not happen all the time. Okay, look at this. This was half yearly chart of Tata Steel, and look at the reversal after that. Okay, look at the reversal after that. So all in all, what you learned today, the location is important, prevailing trend is important, and the engulf is very much important to take a trade there, right? That was the gist of today's session. So it should be forming like how it came. Okay. Okay, sorry. Yeah. So this is the structure. This is actually the ideal structure which was there on this chart. If trend is changing in higher time frame, it will be trending in the same direction for long time. See, there are different trends on different time frames. Every time frame has its own trend. So if you're observing this pattern, let's say this pattern is there on the daily chart. This pattern is there on the daily chart. So daily trend will be taken into consideration. Now what may happen is on the weekly chart, this uptrend may be just a corrective up move on the weekly chart, because weekly the script is in a downtrend. Okay. So it is certainly going to go down, because here it is reversing its trend. So it is going to align with the weekly trend now, and that is why for a week it is going to hold. The pattern validity is going to be one time frame higher than this. And that is why I want to be in the trade as soon as possible. As soon as possible, I want to be in that trade. Because I want to catch this trade as soon as it is aligning with the weekly trend, because if the weekly trend continues, if the price continues with the weekly trend, it is going to give me very good RR. And RR is what all that matters. And confirmation is not required, because the recent most price move is very strong bearish. So not required at all. So this is the example of that. On the lower time, this happened on half yearly. So it is going to hold for at least 1 year. And it did. It halved from that price. The low was, I think, around 250 level. This happened near 660 level, and the low was made was 250 roundabout. This is Tata Steel. Then comes one of the most rarest of the rare price action candlestick pattern, basically called as the island reversal. And friends, don't worry, this is the last pattern I'm having for you today. Okay, so don't worry, this is the island reversal. So island reversal is where it is a bullish or a bearish candlestick pattern. Basically a set of candles are there, not just 1 or 2 candles or 3 candles. It is a set of candles. Basically anything more than 2 is a set of candles, right? Can you see this in this picture, that how the price is gapping up? Yeah, so price gaps up and price gaps down. Okay, so first candle continues the trend direction by gapping in its direction. In the last candle, after a series of candles, market gaps down in the opposite direction. And that is how it is going to form in a trending market. Okay, and at all times this should be the Western style of gap, friends. Western style of gap. Wicks should not be touching the other candles' wicks. Okay, wicks are not touching the other candles' wicks. The set of these candles, any wick of all these candles are not touching the wick of these candles. Okay, it should not. If it is touching, then this is not island reversal the Western way. All right, it is not. So it should be forming after a trending market. Okay, and it is very, very rare price action structure, friends, and it is going to have a lot of significance. And it is so bearish or so bullish that the confirmation is actually not required. Price is anyway trading above the pattern. Okay, this is basically bottom reversal or top reversal pattern. So this is the Indian chart of that. It is Wipro. Can you see this? Price gapped up, and then after 2-3 candles it gapped down, and there was no wick touching each other. So how this is important is when price comes close to it, you should look for engulf on arrival and take a short trade. Just an extension of this is one candle pattern called as the abandoned baby. Abandoned baby because single candle has been abandoned like anything, and it is a small candle because it is a consolidation candle. Now you tell me, friends, abandoned baby candlestick pattern is more bullish or bearish, or island reversal is more bullish or bearish? I mean, if I'm considering just the bearish structure, then which is more bearish? Abandoned baby or island reversal? Also give me the reason. Don't just see it is a 50-50 chance that you are right. So don't just Guess. Okay, give me a reason. Give me a reason. Longer the consolidation, there is more candle than abandoned baby. Okay, so bigger the accumulation or distribution is, bigger the bounce from it is, right? So you're right, correct. You are very much correct. And I think you are paying close attention, Anshul. This is something what I mentioned in the review of accumulation and distribution. Yes, so you're right. So that brings us to the end of today's session. I'm so sorry. Do we see this on lower time frame? Yes, this abandoned candlestick pattern was there also on Nifty chart, but it was not happening at appropriate location. But just for your knowledge, this abandoned baby is actually island reversal on the lower time frame. So you get some patterns like this on the lower time frame, but it is rarest of the rare pattern. You'll not get it very often. It is generally created along with some major news, and this happened around the demonetization news. Okay, so that brings us to the end. You need to identify at least one example of each type of pattern discussed today and try to find a trade based on it. You need to follow the approach that I just discussed with you today, just considering the engulf. You'll get more clarity on engulf like this. And believe me, friends, if you get your hands right like this, then there is nothing like it. You'll get phenomenal trades. So thank you so much, and good night.